Let's take a look at Supermicro stock today. The stock is literally on the verge of a breakthrough and could return to levels of $300. Pay particular attention to volatility. We will also look at trading volume, and we can see that huge volumes are concentrated at the $700 level, as well as $650. We'll definitely touch on the market forecast as well. What does the market think? It thinks the stock will be around $600 by September. Will this level be breached? Let's start from the very beginning. At the beginning of the year, the stock caused a sensation, rising by a total of 300% and entering the SP 500 index. I have made several videos about the collapse of this company, and again, I do not change my opinion one bit. The fall in the stock was simply delayed. It was delayed partly due to its inclusion in the SP 500 index. But without a doubt, what is meant to happen will happen. The stock will most likely fall because it is not supported by any real growth. The rise occurred due to euphoria and speculation. The business is currently worth $41 billion while earning less than $500,000. Think about it, the company earns less than $500,000 and its capitalization is $41 billion. This is of course madness. Now, let's look at volatility and see what's happening and when we can expect a breakthrough in all these values. As we can see, volatility has increased quite significantly recently, reaching up to 90% for some expiration dates. This is partly due to such a sharp decline. The stock has been gradually falling, dropping by 25% over the past 2 weeks. This is why, of course, volatility is starting to increase. Now let's look at the volatility smile and see what's happening there. As we can see, the volatility smile has different directional variations depending on the expiration dates. Different expiration dates have different directions. But as we can see, mostly in the direction of an increase towards the growth of the stock, the volatility increases, but just a slight, gradual rise. However, when it comes to the decline of the stock, we can see that volatility spikes sharply and incredibly. Investors and traders are, of course, accounting for the possibility of this stock dropping. They hedge by purchasing put options. Now let's look at implied and historical volatility. As we can see, historical volatility is the gray line, and implied volatility is the white line. I always say that trading volatility is much easier than trading stocks because volatility always returns to its historical mean. Volatility has a certain point to which it can revert. But in this case, it's a bit different because historically the stock has been very volatile. This has caused its historical volatility to be extremely high. However, after its inclusion in the SP 500 index, the volatility of this stock will gradually decrease, including its historical volatility. Now let's look at the most important aspect, trading volume of options. What's happening here? As we can see, we have really large volumes for both call and put options. For call options, we have 3 very large volumes at $700, $750, and $800. As we can see, we are already below $800, and we also breached $750 yesterday. Now, the remaining level is $700, which is a huge wall of call options. Yes, we tried to breach it today, but as we can see, we still haven't managed to do so. We can also look at put options. There is also a huge volume concentrated at the $700 and $750 levels. What does all this indicate? It suggests that $700 is a really significant level, a huge wall of both call and put options, making it practically insurmountable. And that's precisely why we keep stopping here repeatedly. As we can see, the stock has attempted to break through this level several times in February, April, and now in July. So far, it hasn't been able to overcome it. However, I suspect that sooner or later it will, and when it does, the stock could see a significant pullback. But let me say right away, the next major level is $650, which also has a huge volume, but this volume is mainly from put options. As we can see, call options are not involved here, so this volume is not as substantial as at the $700 level. If we overcome the $650 level, there's hardly any volume below that, and the stock could potentially fall back to $400 and enter another consolidation phase. I believe this will happen sooner or later. Again, my friends, I'm not saying the stock is bad or that it can't grow. It's just that the stock is currently overvalued. Now let's look at the market forecast. What does the market predict? Looking at mid-September, the market predicts a price of $630, $650. By mid-September, the market is anticipating a further 10% decline in this stock. If we look at December, the end of the year, the market is projecting a price of $500, $560, indicating even more of a decline. In my view, there's nothing surprising here. I also remind you that the market incorporates all available information at the moment. Options and derivatives are considered, and naturally, after the upcoming report, the market might reassess the current information. But I also remind you of my philosophy. I don't try to predict market movements. Here, I'm not trying to predict the movement. I'm simply showing what resistance levels we have and what could happen here. In reality, my focus is on position management and portfolio construction, which revolves around risk management, mathematical analysis, and the risk-reward ratio. That's the essence smart position management. I structure my positions so that no matter which way the stock moves, I make a profit. To avoid being vague, I'll demonstrate one of such strategies that I've put together. For instance, if the stock rises to $900, we can easily earn $17,000. If the stock drops to $580, we make $11,000. And this is with just one position. If we increase to 5 positions, the earnings could be much higher. For example, if the stock rises to $900, we could make nearly $100,000. Think about that, $100,000. To be precise, $86,000, which is a colossal amount. Similarly, if the stock falls to $580, we would earn $56,000. As we can see, no matter which direction the stock moves, we make money. This gives us a wide range for price movements. This is how I operate. The strategy looks like this, but let me emphasize that this is just a demonstration. I am not recommending you open this strategy or follow me. I'm simply showing what it might look like. Again, friends, it's crucial to manage positions wisely. This means buying options at the right moment, selling options at the right moment, and hedging risk. This is just a hypothetical strategy I would build if I wanted to profit from this stock. This is the secret to success. As is our tradition, let me show you the 3D volatility chart. This chart consolidates all the information about volatility, options, and expiration dates. Professionals often use this to build their sophisticated positions. Regarding the stock itself, I have already recorded many videos about this stock and have talked about its significant potential for decline. However, as we can see, after this stock was included in the S&P 500 index, it has somewhat stabilized. In my opinion, this is negative for the S&P 500 index. Why? Because it is evident that an overvalued stock was included in the index. The stock, frankly, isn't a top-tier stock. The hype around artificial intelligence has helped them a bit, but there's nothing extraordinarily fundamental about it. Due to passive management funds like BlackRock or Vanguard buying these stocks with pension funds' money, this has given the stock a lifeline for another 6 months or so. This has kept the stock afloat for a while, but sooner or later, I think it will drop to $300. In my view, this is bad because including such overvalued stocks in the S&P 500 index could drag it down. At some point, the index could start to fall sharply. Without such ballast, the index would certainly perform better. But again, this is just my opinion. If you disagree, feel free to comment and explain why I'm wrong, and we can have a discussion about it. Also, let's not forget that we have an earnings report coming out in 2 weeks, which will be crucial for the semiconductor sector. We will see how much growth there is. If there is no growth or there is a slowdown, it could indicate that the AI hype is starting to fade. This wouldn't be a good sign for such companies. I also advise against using leverage because volatility is increasing across the market and it could easily lead to margin calls. So I would not recommend using leverage. We will continue to monitor this stock. Additionally, I remind you that I'm running an experiment where I manage a portfolio from scratch, and you can follow along in the spreadsheet. Be sure to subscribe to the channel so you don't miss new videos. Good luck to everyone.